If you thought your portfolio did well in 2025 because the S&P 500 went up 18%, Ray Dalio says you got fooled by what he calls the currency illusion. Here's what actually happened to your wealth last year. Why institutional investors bought gold while you chased AI stocks, and why this matters twice as much if you're Black in America holding wealth in dollars that are losing value every single day. Ray Dalio just released his 2025 retrospective, and the headline should terrify you. Gold returned 65% in dollar terms. The S&P 500 returned 18%. That sounds like stocks did okay, just not as well as gold. But here's the part that destroys wealth. When you measure stock returns in gold money instead of dollar money, the S&P 500 actually fell 28%. Let me say that again. Your stock portfolio went down 28% in real purchasing power terms, even though your brokerage statement says you made 18%. That's the currency illusion. The number on your screen went up, but the value of what that number can buy went down. All major fiat currencies lost value against gold in 2025. The dollar, the euro, the yen, the pound. Every government-issued currency got weaker, and when your currency falls, it doesn't matter what your nominal stock returns show. Your actual wealth and buying power decreased. Dalio is telling you that if you measured your net worth in ounces of gold instead of dollars, you got poorer last year, even if your portfolio statement showed gains. That's not a currency fluctuation. That's systematic wealth transfer from people who hold paper assets to people who hold hard assets. Now, let me show you why this hits Black households catastrophically harder than white households. The median Black household has $44,100 in wealth. We hold 76% of that in dollar-denominated assets, savings accounts, checking accounts, bonds, money market funds, the cash value of life insurance, all denominated in dollars. White households hold 71% in dollar-denominated assets. That 5 percentage point difference means when the dollar loses value, we lose more wealth proportionally. If the dollar lost 10% of its purchasing power in 2025, which is conservative based on gold's 65% gain, the median Black household lost $4,410 in real wealth. Multiply that by 17.6 million Black households, and you're looking at $77.6 billion in collective purchasing power destruction in a single year. Not from a recession, not from job losses, just from holding the wrong assets while the currency debased. But it gets worse. Dalio breaks down who won and who lost from the policies that drove this currency debasement. The Trump administration's 2025 approach, which Dalio calls government-directed capitalism, was characterized by aggressive fiscal stimulus, tariffs, and deregulation. Those policies benefited the top 10% of Americans, the capitalists who own businesses and real assets. Meanwhile, the bottom 60% struggled with what Dalio calls the affordability issue. That's a polite way of saying inflation destroyed your purchasing power. Grocery prices up, rent up, gas up, healthcare up. Your wages went up 3% maybe. Prices went up 8% to 10%. You got poorer. And here's the kicker. Black households are disproportionately in that bottom 60%. Our median income is lower than the national average. We're the ones getting crushed by the affordability issue, while the top 10% who own stocks, real estate, and gold are getting richer from the same policies. This isn't an accident. This is the design of the system. When governments run massive deficits and print money to fund them, asset owners win and wage earners lose. And we're disproportionately wage earners, not asset owners. Dalio points out that U.S. stocks and bonds significantly underperformed non-U.S. markets in 2025. Europe outperformed, China outperformed, UK and emerging markets outperformed. That destroys the narrative that you have to be concentrated in U.S. assets to build wealth. In fact, being concentrated in U.S. assets cost you money last year. 10-year Treasury bonds, which financial advisors tell you are safe, returned negative 34% in gold terms. You lost a third of your purchasing power holding U.S. government bonds that are supposed to be risk-free. Why? Because Dalio identifies a massive supply-demand imbalance. Nearly $10 trillion in U.S. debt needs to be rolled over, meaning the government has to find buyers for $10 trillion in bonds, and foreign investors are losing interest in dollar-denominated debt. China's reducing treasury holdings. Japan's reducing holdings. When demand falls and supply explodes, prices fall and yields rise. And when you own bonds and yields rise, you lose money. Here's what that means for Black households specifically. A lot of older Black folks hold bonds thinking they're safe. Church investment committees hold bonds. Retirement accounts default to bonds as you age. But if you're holding 10-year treasuries that lost 34% in real terms last year, your retirement just got decimated. And you don't even know it yet because your statement still shows the nominal value, not the purchasing power value. The wealth destruction is invisible until you try to spend the money and realize everything costs 40% more than when you bought the bond. Dalio also destroys the AI stock narrative. Everyone was talking about the AI boom in 2025. Nvidia, Microsoft, all the tech stocks rallied, but Dalio classifies this as the early stages of a bubble. He acknowledges AI improved productivity and corporate margins, but he asks the critical question: how much of those gains actually go to shareholders versus being captured by the government through taxes or by workers through higher wages? History says when productivity booms happen, most of the gains get redistributed away from shareholders. The dot-com boom didn't make most investors rich. It made the early insiders rich and wiped out everyone who bought at the top. If you're chasing AI stocks now in 2026, after they already ran up, you're the exit liquidity for institutional investors who bought 2 years ago. And here's the thing about bubbles that Black investors need to understand. We always get in late. Why? Because we don't have the same access to information. We don't have family wealth to invest early, and we're more risk averse because we can't afford to lose. So by the time Black households are buying AI stocks because they're hot, institutional investors are already selling. We buy at the top, the bubble pops, and we're the ones holding the losses. This happened with housing in 2008. This happened with crypto in 2021. It's happening with AI right now. Dalio's political analysis should concern you even more. He predicts Republicans will lose the House in 2026 because the bottom 60%, the people crushed by inflation, will vote them out. Then 2027 will be messy, leading into the 2028 election. He notes a rising hard-left opposition led by Bernie Sanders and AOC that will fight over wealth redistribution. That means political instability, policy uncertainty, market volatility, and every single one of those things damages Black household wealth disproportionately because we have less cushion to absorb shocks. When markets get volatile, we're forced to sell because we don't have 12-month emergency funds. When policy gets uncertain, employers freeze hiring, and we're the last hired. When wealth redistribution fights happen, the compromises always seem to cut programs we depend on while protecting tax breaks for the rich. The political chaos Dalio is predicting for 2027 and 2028 is going to widen the wealth gap further. On geopolitics, Dalio says the world shifted from rules-based multilateralism to power-based unilateralism in 2025. That's a fancy way of saying countries stopped cooperating and started competing through military force and economic sanctions. That increased military spending, which increases debt, which requires printing more money, which devalues the currency, and it increased demand for gold over dollars because when the global order is unstable, countries don't want to hold reserves in the currency of a country that might sanction them. China, Russia, India, they're all buying gold and reducing dollar holdings. That's why gold went up 65%. It's not just an inflation hedge. It's a geopolitical instability hedge. Now let me connect all of this to what you need to do with your money. Dalio's final advice is that we're in a period of high debt, political polarization, and geopolitical instability. He says diversification is key. Don't be overly concentrated in U.S. assets or fiat currency. Watch the big forces, debt and money creation, internal politics, external geopolitics, acts of nature like climate change, and technology like AI, and hedge your currency exposure. If you don't have a strong view on which currency will win, stay hedged to a least risk mix. For Black households, let me translate that into specific action. First, you need gold, not 5%, not 10%, 20% to 25% of your investable assets in gold. Why so high? Because you have 76% in dollar-denominated assets compared to 71% for white households. You're more exposed to dollar debasement. You need a bigger hedge. Gold went up 65% last year while your dollar assets lost purchasing power. That's not a coincidence. That's the market telling you where to store value when currencies are being debased. Second, you need international diversification. Dalio showed you that non-US markets outperformed US markets in 2025. You don't need to move anywhere. You just need some of your stock portfolio in international index funds. VEA for developed markets, VWO for emerging markets. When the US is running unsustainable deficits and debasing the currency, other countries with better fiscal discipline will outperform. You want exposure to that. Third, you need to reduce US bond exposure, especially long-duration treasuries. Dalio is bearish on US debt because of the supply-demand imbalance. $10 trillion needs to be rolled over, and foreign buyers are disappearing. That means yields go up and bond prices go down. If you're holding a 10-year treasury, you're going to lose money. Get out. If you need fixed income, use short-duration bonds that mature in 1 to 3 years, or use TIPS, Treasury Inflation-Protected Securities, where the principal adjusts with inflation. At least then you're not getting destroyed by invisible purchasing power loss. Fourth, be extremely careful with AI stocks. Dalio calls it early-stage bubble. That means there's still upside, but the risk-reward is terrible at current prices. If you're going to own AI exposure, do it through broad index funds, where it's 10% to 15% of the portfolio, not through concentrated bets on individual names. Bubbles are great for people who get in early and get out before the pop. They're terrible for everyone else. And history says Black investors are usually everyone else. Fifth, increase your emergency fund to 18 months of expenses if possible, and keep it in high-yield savings, paying at least 4%. Why 18 months instead of the standard 6? Because Dalio is predicting political mess in 2027 and 2028. That means potential recession, and Black unemployment in recessions goes to 12% to 16%. You need a longer runway because you face higher job loss risk. Sixth, educate yourself on what real wealth means. Dalio is trying to teach you that nominal returns are meaningless. What matters is purchasing power. If your brokerage statement says you made 18%, but gold went up 65%, you got poorer in real terms. Start measuring your net worth in ounces of gold, not dollars. It's a mental shift, but it changes how you invest. When you see that the median Black household has $44,100, that's about 17 ounces of gold at current prices. If that number isn't going up in gold terms, you're not building wealth. You're just keeping pace with currency debasement at best, falling behind at worst. Dalio's analysis of 2025 is a warning about 2026 and beyond. The currency illusion fooled people into thinking they did well. The reality is, the dollar got destroyed, and everyone holding dollars got poorer except the people who owned hard assets. Gold up 65%. Stocks up 18% in dollars, down 28% in gold. Bonds down 34% in gold. If you're a Black household holding 76% in dollar assets, you need to understand that every year the government runs trillion-dollar deficits and prints money to fund them. You're getting systematically robbed of purchasing power. It's not dramatic, it's not visible, but it's compounding. $4,410 lost this year, $4,000 next year. Over a decade, that's $50,000 in purchasing power destroyed from a $44,100 starting net worth. You're going backwards. The wealth gap between Black and white households is 6.5 times right now. $44,000 versus $285,000. If white households are in stocks and real estate and gold, and we're in dollar cash and bonds, and the dollar keeps getting debased, that gap is going to become 8 times, then 10 times, then 15 times. The system is designed to transfer wealth from wage earners holding paper to asset owners holding real things, and we're disproportionately on the wrong side of that transfer. Ray Dalio manages $140 billion. He's not guessing. He's telling you what the big institutional money already knows and already acted on. They bought gold in 2024 and 2025. They reduced U.S. bond exposure. They diversified internationally. They positioned for currency debasement and political instability. You're finding out now in 2026 after gold already went up 65%. But it's not too late. Gold can go to $3,000, $4,000, $5,000 per ounce if the dollar debasement continues. You're not too late. You're early compared to the masses who still don't understand the currency illusion. 3 key takeaways. First, the dollar lost massive value in 2025, and measuring your wealth in dollars hides that loss. Start thinking in gold terms to see real purchasing power. Second, Black households are disproportionately exposed to dollar debasement because we hold 76% in dollar assets, and the affordability issue Dalio describes is crushing the bottom 60% where we're concentrated. Third, the solution is 20% to 25% gold allocation, international diversification, reduced U.S. bond exposure, 18-month emergency fund, and measuring wealth in real terms, not nominal dollars. This is institutional intelligence for our community. The wealth gap is widening because of systematic currency debasement that's invisible to people who only look at nominal returns. Subscribe so you're positioned before the next currency debasement cycle. You will not find this analysis anywhere else.